everyone for coming. We really appreciate your response, and we're here to open and answer kind of any questions you might have. We wanted to just create, an informal conversation about not downsizing, but right-sizing. And I know that there's a lot of questions around that as to when do you make that decision? How do you make that decision? What sort of things should you be looking for? So we hope to answer all of those questions and more. But as I said, it's a casual sort of luncheon, so feel free to ask questions kind of as we go.
It's the first time we've done this, and of course there are varying degrees of right-sizing. It's from, kids off to university or moving out, and you could use a smaller home, to moving into assisted living or what have you. And there's a variety of choices in between. So first time doing this, just, we get a lot of people asking, so we wanted to just put something together to begin the conversation anyway.
And this is going to be recorded, so if you have questions afterwards or you want to listen to it again, we will be having this in a webinar format. It will also be on YouTube as well, so you can always listen to it again. So today, just to give you a summary of sort of what we're going to be looking at this afternoon, is we're going to have Peter Borszcz. He's going to speak on the legal side of things. We've got a panel with our dad, so Bruce Stone. And he has downsized, and so he's going to talk about his experience in that. And then we've got Sharon Maslan, who works with us, and she has downsized a few times and moved around, so her experience she'll share. Yeah. And then we have Juliana Wong, so she's here at the back, but she'll be coming up and she'll be talking about sort of the reverse mortgages or the financial side of things, and then we'll be following up at the end to answer any other questions. So with that, I think let's start. We'll have Peter, you can introduce yourself and I'll step out.
Yeah, not a problem. Well, thank you for having me. For those of you who haven't met me, my name is Peter Borszcz. I am one of the two managing partners of Montgomery Stone, and I've been doing this for 19 years, I guess now, and knowing these lovely ladies about as long. When you're considering making a move, I think there's two, from a legal perspective, there's two things that I would really like you to keep in mind, and that is to understand the costs of what you're about to do, and know what you're buying. From the cost perspective, there's some things that are pretty obvious, right? All right, we have to pay the movers, there's some commissions, we gotta pay some utilities, maybe we have to do some renos in the new home. What I don't want you to forget about though is taxes, okay? And there's two big ones that affect that affect real estate, and potentially three depending on the type of real estate that you're buying. Okay, so the first one is property transfer tax. And so when we buy another fee simple or stratified dwelling, you're going to pay property transfer tax. It's 1% of the first $200,000 and 2% of the balance up to $2 million, and then 3% over that amount, and it could even go higher than that if you're looking at over a $2 million property. So it is a substantial amount when you go ahead and consider a move. So if you're trying to do the books on it, don't forget about property transfer tax as an additional cost to moving. So what I kind of like to say to people, if you buy and sell for the same price, it's still going to be in this in the Okanagan probably $40,000, $50,000, $60,000 in terms of costs that you're going to have, even if the houses buying and selling were about the same price. So bear that in mind. Now, where does GST come in? GST comes in if we are buying new housing, or if we're buying housing that has been used for any type of business purpose. So that could be something that was, just get into the weeds a little bit, maybe something that was a ski condo at Big White, maybe it was at Playa del Sol. Sometimes you can have GST arise on a sale. So if you're buying anything that maybe had a hotel type of use or a commercial type of use, maybe it's next daycare or something like that, GST is something to watch out for. The other tax that I'm going to mention just in passing is PST. PST usually does not apply on homes, but if you buy a manufactured home brand new, you're going to pay PST. So especially on some of our native land developments, which I will briefly mention, sometimes if you're moving a home there, you're going to have PST buying that home from the manufacturer. Okay, so remember the tax costs on your homes. Talking about what to buy and the types of housing we have here in the Okanagan, we're really very comfortable with fee simple housing, right? You have a house in a subdivision, it has a yard, it's all yours. That usually looks and feels like fee simple. But don't forget, we also have stratified housing. And strata can be a whole bunch of different things. You could have a stratified bare land subdivision. So Horizon Drive in West Kelowna is a great example of this, where it's a stratified community. They have strata rules, but it looks and feels like a house, okay? Or you could have a stratified apartment building or condo. Now, when you buy into strata, whether it is a bare land strata or an apartment strata or a townhome strata, please remember to review the rules and bylaws carefully. Those rules and bylaws have to match your lifestyle. One of the most common questions I get as a lawyer is, all right, well, my dog is this big, and can they find me? Yeah, of course they can find you. And they can find you on a daily or weekly basis, depending on the type of bylaw that you're breaching. And it could be in my experience, people downsizing, if they haven't fully considered that question, does my lifestyle match this community? That's when they move back to fee simple housing. And talking about the cost of housing and things like taxes and property transfer tax, we don't want to pay those twice, right? So we want to be sure when we make the move that this is the right thing for us. It's a really good check. A common piece of advice for strata is talk to the people who are in there. Give the strata council president a call. All right, what's going on? Things like parking and pets tend to be the most contentious issues in a strata, right? The dog is going to the bathroom in the wrong place, or somebody's parking their RV in the wrong place. All right, well, if you have an RV or if you have a large pet, those are really things to think about when you get into strata. The other type of housing that we see here in the Okanagan is leasehold housing, and we see it in two different contexts. We see that in the context of fee simple leasehold housing. So, here on Stillingfleet by Gooshigan, we have some leasehold housing that is very kind of senior focused. And then also on West Bank First Nations land, we see a lot of leasehold housing. If you buy leasehold housing, you have to carefully review and understand that lease. On First Nations land, for instance, you can have everything from a 29-year lease to a 99-year lease, and there's everything in between. Oftentimes, that lease is going to look and function a lot like a strata, but we want to make sure that that's actually the case. So depending on the type of housing you're looking at, bear that in mind, and remember to do that due diligence. And we'll talk about how to do that and where I come in terms of that as well. With First Nations lands, remember that there's different registries and different risks. So for stratified property or fee simple property, the government maintains a land title registry. What you see on that registry is what you get. It provides assurance to you as the homeowner that you have title to that property. If you buy on First Nations land, there's multiple different registries depending on the band. West Bank First Nations actually is one of the leaders in this area, and they're very good at land management. Other bands tend to rely on Ottawa, and if you're relying on bureaucrats, it is not as well managed as we would like it to be. So there is differences there, and depending on where the property is located. But I will tell you that West Bank First Nations has developed a reputation for being one of the better bands. It's not quite as good as fee simple, but they do manage their registry really, really well. Mm-hmm. So what does the lawyer do? Well, importantly, all you need to know is when to call me, and that's when you're writing a contract on a deal. Don't wait until after you've removed subject conditions. When you write that contract, call me at that time, and we'll go through the exact type of housing that you're considering. We'll go through the risks. We'll talk about things like title insurance, which is really important these days to prevent title fraud. In an era of AI and identity theft, title fraud has become a real issue. So title insurance has become very, very important, but we'll talk about that. And then the other thing is that when you write that contract, if you're not writing on an existing home, but you're writing on something that's new, we'll also go through things like specification sheet and making sure that contract actually encompasses everything that you want to buy. So I don't want to take up too much time today, but I did want to remind you of those two things, is to remember the cost and to really understand what you're buying. So if you keep those two things in mind, and give me a call when you write the contract, and we'll go from there.
Wonderful.
Okay.
Some great points, Peter. Thank you.
That's great.
Well explained.
Anything on estates, and do you do do you work in the estate
Yes.
side of business too?
Yeah, we have an entire wills and estates department at Montgomery Miles and Stone and help my clients with that. From that perspective, it really depends on how you're holding title with your partner. Is it held as tenants in common? Is it held as joint tenants? Commonly, between life partners, you're holding it as joint tenants, in which case we just simply need a death certificate. We make that filing, and you as the surviving partner can go ahead and sell the property and deal with the property. If that's not the case, then probate is required, so then we'd have to do a probate application in that case. One thing I will caution you all against is that oftentimes the bank teller or some other person giving estate planning advice will tell you to put your child on title to your home. Putting your child on title to your home needs to be done with accounting and legal advice. There are some limited exceptions where that's a great idea and you will actually save probate fees. There's a lot of situations where it will not, because you may lose your principal residence exemption. You may also create a constructive trust. You may create a wills variation claim in your family between your kids. So very important that before you do put your kid on title, you have legal and accounting advice.
Excellent, great advice.
Yeah.
And where can people find you?
Montgomery Miles and Stone. I brought some cards, so if you want a card, you can grab one. Peter at mmslawfirm.ca. It's all there.
Awesome.
Wonderful.
Okay.
So we'll walk around, we'll hand out cards. Can I steal those from you?
Yes, they're for
Okay,
you.
so I just helped myself. So we'll hand these out. Does anyone have any questions for Peter before he's
I do.
finished? Yeah.
When you're talking about strata fees,
Yeah,
I think you should be very aware of upcoming
levies.
costs to some major
Yes.
renovations or
So when
repairs.
you buy into a strata, you're gonna get something called a strata Form B package. And in that package, they're gonna have the bylaws. It will also have what's called a depreciation report. And that depreciation report will show a 30-year projected, upcoming levies, those types of things. Because when you buy into that strata, not only are you buying that piece of land, but you're also buying a share in the company that is administering that land. So that depreciation report becomes very, very important to understand, and they should show you, okay, we're gonna replace windows in 5 years, we're replacing a roof in 10 years. And then you cross-reference that back to how much are you actually collecting? And is there gonna be enough in the bank so that when that 5-year period is up or that 10-year period is up, you can take it from the strata bank account? In most cases in the Okanagan, I'm gonna be very frank with you, it is not. Usually for those big items, the windows, the doors, the roof, you will have a levy of at least half, if not more, in addition to the funds being taken out of the contingency reserve.
We've had a number of developments and buildings in town. One example is some of the gated communities have had poly B. And poly B has been prone to leaking. We've heard about it in condos, in apartment style condos, and lots of that PEX plumbing, it's been replaced or what have you. There are some developments in town where all the water lines going down the roadway to the homes in, a 10-acre, 20-acre development have got poly B, and that needs to be replaced at a cost of $1 million, and the contingency doesn't have anywhere close to that. So it's a great point, Suzanne, to bring up and really be aware and be careful of some of these sort of surprises, because we've had buildings and people who have had a special assessment of $50,000, $100,000, just to bring the building up to current code or what's required.
Yeah, and there are options for the strata when they do that. There are banks that do strata lending, so you could, the strata could potentially do that, but that has to be decided on a strata basis. It's much easier for the strata to simply levy its unit holders. So yeah, so definitely something to bear in mind.
Great point.
Yeah.
Excellent. Any other questions?
Yeah.
I have a quick one. You mentioned fraud title going on. Now, I know it's pretty severe in the US. Is it happening in Canada? You said it's more.
There was, so in Ontario, there was 2 cases that actually happened where the fraudster got paid out millions and millions of dollars. In British Columbia, the law society keeps internal data on this, and they have told us of 5 instances of fraud that have been caught by the lawyers involved. Where there's one local incident here where a South African fraudster impersonated another South African to try to sell their big white condo. And it was caught by the lawyers that were involved here locally. It's one of those situations where everybody is in on it, right? So you have all the fraudster kind of puts layers of authenticators around them, meaning they may have a fraud, in this case they had a fraudulent lawyer in South Africa, they had a fraudulent realtor in South Africa that verified their identity and all that. So so you have to be very careful.
So how was it caught?
It was the lawyer that was involved. They had some red flags, and ultimately she said, "No, I'm not going to do this unless you go to another lawyer in South Africa that I pick." And they refused, and it was then pretty clear that it was a fraud. So now the Law Society has changed its guidance, and for the last 2 years, we used to only get title insurance if it was required by the borrower. That was kind of the standard in terms of real estate transactions. Now, since for the last 2 years, we've actually gotten title insurance for the homeowner as well as the borrower on every single real estate transaction. And it's not, typically title insurance was to prevent a Fortis or BC Hydro line from going through your property and requiring you to demolish your house. Well, in BC, we have other protection against that. So we didn't worry about that from the homeowner's perspective. So it's not title insurance to prevent from unknown charges on title. What we get title insurance for here from a Law Society perspective in British Columbia is to prevent against fraud, so that if everybody is in on it and you are the unsuspecting victim, you do not lose your home.
And what sort of cost would that be?
$200.
Wow.
It's not much at all.
No, yeah, it's a no-brainer compared to what.
Yeah,
the
and
other-
it's a one-time fee. You just pay it when you buy the house.
And
That's
if you
it.
don't currently have it,
You can always get it.
exactly.
You can.
Yeah, you can always add it on after. It's worth it.
Yeah. It's
Wow.
the other piece of advice would be to have a mortgage against your property. So a lot of that was the kind of the typical if a senior citizen was worried about somebody faking their identity and putting a mortgage on title to their property that was held mortgage free, we'd say, well, just get a line of credit and put it on there so that there's some sort of other thing there. But in an era now of AI and deep fake, you might actually want to do both, right? Is to just make sure that you want to protect your biggest asset for a lot of us. So.
So you're suggesting put a line of credit on your house?
If you can get one, yeah, absolutely. Yeah, I would, because that sits as a first mortgage charge, which means nobody else can get a first mortgage charge. And that means that's another barrier to overcome for the fraudster.
Juliana can speak a little bit more to that, I think, right?
Yeah, no, I laugh, but it's true. If you can get a line of credit in this day and age, absolutely. It's no cost to you. Once it's on, you only pay on the balance, so you have a line of credit registered on your property, but you do have to qualify.
Yeah.
Excellent. Any other questions?
I understand what you mean about the joint tenancy being a bad idea, but if you are trying to sell to a family member, like a son or daughter, you still pay property tax, or transfer tax, sorry. There's no simple ways to avoid that stuff, right?
Well, actually, if it's a principal residence between vertically related individuals, meaning I'm a father selling to my son, and that is somebody's principal residence in that chain, that's actually a property transfer tax exemption. So if you want to essentially gift your property to your kid, you could. The issue becomes if you have other kids. And was that a true gift, or was that to be held in trust? So this is where the accounting and legal advice comes in. If you only have one kid and you want to give them your property and they want to live there, absolutely, we can do that. That's not a problem. That's where it makes sense. It's where you have multiple children and we may be losing a principal residence exemption that we have to think about it.
Right.
But that's as a gift, not as a sale, correct?
You can also sell it to them.
Okay.
Yeah.
Just real quickly, I'm not sure if you're into giving opinions or not. Especially. if it's-
Usually we have to open a file for
well,
those.
especially if it's about government policy, but anyway,
Governments I can tell, that's not, absolutely.
first question though, CHIP program,
Yeah.
do you have a for or against opinion?
I think you have to have a firm understanding of the costs, and I'll leave it to the mortgage broker to talk about that,
Oh, okay.
absolutely. But when you come into my office and you sign a reverse mortgage, I'm gonna make sure you've looked at all of your other options before you sign that. Because there are some significant costs to those programs that you need to fully understand. Because I've had both types of parties in my office where, you know, somebody signed up for it, greatest thing ever, absolutely, help me access equity I would not ever otherwise have to. They understand how much they were gonna pay for it, fine, they used it minimally, right? Used it minimally, but helped them kind of bridge the gap. And I've had other clients come into me when they're selling the house and we're paying it out and saying, this was the worst thing I ever did.
Right.
Okay, so and it's really, did they fully understand the costs when they signed up for it? Were they fully educated? And if they're fully educated, they're usually in that first category. And if they're not, then they're usually in the other category and they're thinking, why did I pay that much interest? Why didn't I just move out sooner?
Those TV commercials cost a lot of money and they've
Yeah.
run them a lot of times.
Yeah, exactly.
Kurt Browning needed a second career.
Yeah, exactly. It's true.
Yeah. Anyone else?
Thank
I will move to.
Okay, and grab
Thank
a
you so
sandwich,
much,
Peter.
P.S.
Yeah.
Thank you. And Juliana, if you would like to come up.
Oh, we
Sorry,
can jump
Juliana.
right into it.
We're gonna pause, actually.
Okay.
We're gonna do the panel first, only
Okay.
because our dad has to go, so.
Sure.
Yeah, you scoot over here.
So with the
sorry if
musical
that's-
chairs.
No, okay.
Okay.
But our dad told us, he's like, we have to be done by X time, he's still,
No, I've got lots of time.
okay, good.
Learning something. No, I'm taking a Mahjong course at 1 o'clock. Anybody here play Mahjong? I'm just learning.
Oh, that's great.
Yeah,
Good for you.
it's supposed to be good.
Which
I
one is
don't even know
it?
what that is.
Is it the American version or the?
I haven't got a clue. I just saw it and I thought, gee, I'd like to learn that.
Good for your
So I
brain.
signed up with SLR, Seniors Learning and Retirement.
Okay,
It's a
okay.
fantastic organization.
Good.
Yeah, the first year I signed up for everything. And then I had no time to play pool, meet with anybody. I was just always on course. But that's one of the few courses I'm taking now.
Good, yeah.
All right, okay, so
Sorry.
no, it's okay. So let's start, so we're just gonna have an open conversation. We'll ask them questions to answer, and again, if you guys have questions, just put your hand up and we can field your questions as well. So, Tamara, I don't know if you wanna start?
Sure. You know, I think a big question we get that people ask, and probably the number one question is, when do I start? When do I think about downsizing? Do I wait? You know, a lot of people feel like they waited too long and then it sort of becomes a rush thing, so.
Or overwhelming.
Yeah.
Yeah,
Yeah, I can answer to that. I downsized 8-9 years ago. And it started off with my daughters coming over and saying, you know, Dad, this is a pretty big house. It had 4 bedrooms, 2 offices, big yard, and a detached house on it. And I said, no, I like it. We designed it, or my wife and I designed the house. We had it built for us. I thought it was perfect. And then
They were looking for something to sell, weren't they?
well, that's another part. I had the price way up here, and I was a realtor. But then what happened is I started really thinking about it. And I went out and looked at a few houses, and I thought, God, they're terrible. I couldn't live in them because I was looking at somebody else's house. And I don't want to live in your house. You may be happier in hell, but I'm not. You know, so then what happened is our daughters came in and did a walk through the house. And if you're doing this, I'd really suggest you do this. Is they came in and they went into the family room. And it has about 6 chairs, a Chesterfield and a bunch of chairs. And they said, wow, is this nice? You know, do you have all the kids over to watch TV? No. Where do they sit when they come over? Oh, in the living room. Oh. And after they left, I thought, I don't need this big family room. Then we went up, and the only mistake I made in our house, really, was the ensuite. And they looked at the ensuite and they asked a whole ton of questions. They became not our daughters, but our realtors. And they said, do you like the ensuite? And I bluffed and said, yeah, it works really well. But afterwards I thought, it's a piece of crap. And so then we went out and we looked at houses. And every house I looked at was somebody else's. And I didn't like any of them. We put our house on the market, took about 1.5 years to finally decide, and we sold it. I thought, Jesus, now we got to do something. And I still remember the house. It went back on the market a little while ago. And I went and looked at it and I thought, I couldn't live here. Now, what we bought was the ugliest house that I've ever looked at. It had mauve carpeting. The back part is wall-to-wall window, covered with curtains that hung there. They were dirty. They looked like hell. The kitchen was, it had a fish pond in it. It was terrible. The ensuite, I had a lousy ensuite. This one was even lousier. And I walked out into the backyard and I'm standing out there and I thought, this is it. And I came back into the house and here's Patty saying, oh my God, what are we looking at? And I said, forget all everything is here. We're going to make it our house. And my point is do this early enough so you know what you want to make your house. And an example, we sold ours and did okay. I went into the ensuite and absolutely gutted it. And I think we've got the best ensuite in Kelowna now. It's got a steam bath, it's got double sinks, the toilet's in the right location as far as I'm concerned, it's got tons of cupboards. Well, we didn't stop there. The family room is what we need. It's for 2 of us. The living room is a decent size, but I replaced in the kitchen, I gutted everything, took out all the cupboards, but there was enough money out of the sale of the house that I could do it all. Where we ended up, I never calculated. I meant to do it. But I'm sure we saved money by downsizing. But what we got was a new house for me and for Patty. And that's why when Tamara and Shannon said, when should you downsize? I said, my thinking is do it while you can still think about what you want. So
And
you
still
can
do
make
it.
that change. And you've got the money to do it because it comes out of your house.
You hope. You hope it comes out. And just playing devil's advocate, because I think there's
My
a
question's coming up.
yeah. The perception is that you will downsize and down price, and that doesn't always happen. We have a number of people who say, well, my house is 4,000 square feet, so I'm going to be able to sell it and move to something that's 2,500 square feet and save all this money. And I go, well, actually it's going to cost you more. Doesn't always, but sometimes it does. We're seeing a trend away from really big homes, and downsize might mean down price, but
And I
Because it's
think
driven by location.
yeah,
Very
right.
much so.
Yeah, Sharon, why don't you
Yeah.
speak about
Because,
time?
a home, let's say a large home in Dilworth or Wilton or Upper Mission, people in the age category that we're in of retiring and downsizing, they all want to be in the lower Mission or, in the flats, I'm gonna call it. So there's a premium on those homes and on rancher style homes. So, they're trying to eliminate the stairs and just have single level living. Well, those are sort of the golden nuggets of the real estate market, having those ranchers.
They're also more expensive to build. Cost per square foot, builders will quote you, and they're anywhere now from $300 to $600 and up per square foot. And they'll quote you for the whole house, whether it's on 3 levels, 1,500 square feet a level, or 4,000 square feet on 1 level. It costs the most for that footprint, that main floor, and then it's less expensive down and less expensive up.
I think the whole thing too is just having your costs ahead of time. Like I know some of you are right in the process of downsizing right now. And I think the key with that is knowing, okay, when I sell, what's that value? What could I get? And then when I buy, what does that look like? And if you're wanting to do some home improvements, I think it's just having the information. And I think the key with what our dad was saying is start that early.
Yes.
So you know that information and you have that. And if there is a difference in, you know, what you're selling for what you're doing, at least you know that and can move forward with that, or you wait if that's not the right time or what have you. Sharon, maybe,
Smart.
oh, yeah, Dad?
Well, I think that if you're downsizing to another house, straight house, normal house, when I was in real estate, I saw that so many times. The girls just said, gee, you know, my house is 1,000 more square feet. Why is that one so much? And as you said, it's because it's downtown and a better location. In our case, I bought a dump. And so I had some money. But the principle that I was trying to enunciate is that when you look at a house, it's very hard to look at it as though it's your house.
Mm-hmm.
But if you look at it and say, in our house, there's one thing that I really don't like. And there is in every one of our houses. Okay? And sit and say, I'm going to change that. Then that new house becomes your house. Now, an interesting thing, I went back, moved into our house, I went back in the spring because I had quite a different irrigation system and they needed some help with it.
To the other house, his house.
The
that
other
he sold.
house, the original house that we owned. And it was funny because we were sitting at home and saying, God, that was a great house. We had a wraparound veranda, et cetera, et cetera, et cetera. I went back to the house to help with irrigation, and the truth is, I'd never buy it. And I looked at it and I thought, thank God you guys bought it, because it's not what I like at all. I much prefer ours. It's smaller. Probably we're in a similar value as to what you're saying. But I did start off to change one thing. And because we bought a dump, I changed a lot more and ended up to the same. But I think my point is that whatever house you downsize to, do it when you got all your faculties. And you know you're gonna have your faculties. I've been there for 6-7 years, and there's still things that we're changing. Interesting enough, I haven't unpacked the garage yet. I've still got a whole bunch of stuff in the garage.
See, there's hope,
But
we're gonna get
have you
another
missed
listing.
it though?
I brought a dump.
You have all these boxes, but you miss
I don't
anything,
miss
you're
it.
functioning just
And I
fine.
actually took a trailer, which our daughters don't know, and I backed the trailer in, and I thought, nobody's asked me for this crap.
And you took it to the dump, we do know, we went
True
looking
enough,
for that
went to the
stuff and it's
dump.
gone.
And there's still a bunch on the top that's still there. But my whole point is, do it early enough, please, because you need a lot of time to change it. And more than changing furniture, it's painting, putting different cupboards in the there's lots of things that don't cost a lot of money, but they make it your home.
And I think another thing too, from our experience having our parents downsizing, was noticing how much work it is getting your house and moving. It's a lot, and I think you're in your home for a long time, and I think sometimes you don't realize how much stuff you accumulate. And once you start packing and going through, it takes a lot longer than you think. But there are a lot of services out there that will help with all of that. Handyman to come and fix things, people to help pack and do all of those things. So it might seem ominous when you start, and it might think, oh, this is going to take so much. But there's a lot of services that are here in Kelowna that, you know, will help with that whole process.
You'll never forget, you had somebody come into our house, and I had to divorce, there's our daughters. They had somebody to come in, I forget the words you used, they redo your house, get it ready for sale.
Staging.
And they came into the house and they said, oh, get rid of that. I looked at them and said, what the hell are you talking about? That's a really nice piece of furniture. I bought that when we were really broke. And she said, it doesn't fit. Get rid of this and get rid of that. And I thought, you know, in our new house, I don't have any of that stuff. It's all gone. They were right. I just couldn't see. But again, that's why I say do it early. Because if you do it too late, you can't make that change of thought.
Sharon,
And actually, when my mom was downsizing out of a rancher in Penticton and moving up to Kelowna, her thing was, I want to make the decisions when I'm in control and not when my kids are telling me I have to do this, right?
Yeah.
So that was another
yes.
motivation for her.
And Sharon, maybe you can talk because you've downsized and right-sized, I guess we should be saying, instead of downsized, because you've right-sized a few times and moved around.
Yes, I have.
Of course, she's a realtor, so we tend to move quite a bit, but you have moved and you've lived in a condo, you lived in a townhome. You're now moving into something different, or you just bought
Yes.
something different. So could you talk about your experiences and the benefits maybe of each different style of property?
Absolutely. So when I first moved from Calgary, I had a large rancher, so over 4,000 square feet. My backyard was like a park. It was a lot of work and a lot of space. And I already knew then, I'm not using this whole lower level. Why do I have this, right? So then when I first moved here, I bought a rancher in Gallagher's. And it was a new build, so I had the benefit of a new property, and I enjoyed it. But I also realized for me, after it was sort of like a long-term dream from Calgary. Oh, I'm gonna live in Gallagher's. I'm gonna have this lifestyle community. I'm gonna, be utilizing all the facilities there. Well, as it turned out, I wasn't really living that lifestyle because I was working still and up and down the hill, and it wasn't really suiting me. So then I moved into a townhome over on Abbott Street. So. But it was multi-level, and then I did some renovations and really sort of turned the property around. But actually, exterior-wise and getting into depreciation report and things, I knew there would be things coming down the road, and then I thought, these stairs aren't really convenient up and down and all around. So then I bought a condo. 2-bed, 2-bath. I've never lived in a condo in my entire life, so this was going to be interesting. I've shown a lot. I've had, many clients that are super pleased with their condos. So I thought I'm going to give condo living, a whirl. And I did that and lived there for almost 3 years, 2.5 years. One of the things I can say about condo living, in selecting a condo, in the Okanagan, there's so many condos that have tiny, tiny little balconies. And to me, the Okanagan is all about outdoor living. So I did choose a condo with a wraparound balcony and a good size 1550 square feet. So, price point wise, you're at the higher, towards the higher end, but you're basically getting your rancher in the sky. So what I loved about it was the views, outstanding. I bought in sort of like a boutique building in that it's a smaller building, so only 6 stories, 24 units, so there's pros and cons to a smaller building. You get community, but if, down the road we were hit with special assessments or something, you're gonna take a bigger chunk of that because there's fewer owners. Then after all of that and years of, really thinking through things, I just bought a rancher in a gated community. Woohoo! So,
And she's renovating.
And I'm renovating. I am gutting it, absolutely. So there is help. I had Habitat for Humanity and an organization of men called Man Shed or Men Shed. So they were there this week and they pulled out every cabinet, all the kitchen, all the laundry cabinets, bathrooms, everything, and the walls are coming down. It's a major deal, so building permits, electrical permits, all this kind of permitting. But to Bruce's point, I realized when I walked in there, it felt so good and at home, and the location. Yep. So it's a gated community, backing onto a waterscape, it's calming, it's really pretty. And I was looking at location and the feeling of that place and the home and the community more so than the interior. So then I realized, when I was walking through, I love to visioning, and I could put this here, I could do this, I could do that, and make it my own. So we kind of landed in this exact same place. I just took more steps to get there.
I think, and you said
But we're less than a mile apart.
I know, isn't that great?
Yeah.
Yeah, so we're really close. We're almost neighbors.
a few things that you mentioned, Sharon, and you used the word community a few times, and I
Yes.
think that's a big thing when you're looking at downsizing. You go from this big home, which is lovely when you have your family and you're raising your kids there. That's amazing to have, but when your kids move away, you've got all this space and you kind of lose a little bit of that community in a sense. So if you go to townhouse, condo, some of those places, you gain that sense of community. Is that something that you experienced when you downsized? And I'm gonna ask that question
Definitely.
to both of you.
Definitely, even like moving to Gallagher's, we've got friends here from Gallagher's, and I loved it, especially moving province, from Alberta to BC. It was like I was walking into a new life. I met so many great people, and I loved Gallagher's. And then the community of the building I was living in, because it was smaller, it's not one of the gigantic towers downtown, you recognized the faces and the people, and you saw them everywhere. And then there were some social things. So I felt I knew my neighbors. It wasn't like you're just living in a building anonymous,
Yeah.
So you felt a connection. Now moving into the gated community, they do have a clubhouse, they have a pool, all that business. And they have a newsletter that comes out once a month. They've got a whole list of social activities, and you can choose to get involved in as many or as little of those things, but there's those connections. So leaving the big family home, let's say, it was maybe a great community, to raise your children, but now a lot of those people that maybe were the first owners there when you bought and you raised your family, they're all going. And then new people are coming in, and probably younger families, and you may feel less connected to that community.
Mm-hmm.
And Dad, I'll ask you, because you're in a complex, very small complex. There are no amenities in your complex, but your sense of community, I would say, is quite great. What do you think?
Well, I'm a fairly private person. I don't want anybody knocking on the door and saying, "Can I come in for a coffee?" I'm not interested.
Unless it's your
Including
daughters.
us. They don't even let us.
I was going to come and teach them.
One of the first things
Exactly. Dad, you need Margaret for the mahjong.
Yeah, maybe Margaret, you
This
can.
may sound terrible, but when we first moved here in our house, I called my parents and said, "I love you dearly, but don't come to our house unless I ask you." Okay, and that may sound terrible, but we had a wonderful relationship. And even now, Tamara and Shannon and Tiffany will phone ahead and say, "We're thinking of coming over for coffee." "Oh, for God's sakes, I'll put the coffee on." It's great. Now, because of that personality, where we live now, we have no common amenities. I go to the gym. I got lots of social contact at the gym. I'm friends with a number of people. Our backyard, we all pack into a grassed area and then trees and then a creek. And we never walk along the creek because we don't interfere with anybody else. It's all kept to your privacy. And that's just my personality that I really like.
But you've got good friends in that community now, so I guess my point is you can live in a space where you have your privacy. Some of these areas when you right size, it doesn't mean you're giving up your privacy, because you have your privacy. People don't.
Well, we got our
come by.
privacy, but if I needed an example, 2 days ago I needed something done in the bedroom, and I couldn't figure it out.
Mom just said no.
Use that example. That's the wrong example. I was trying to fix something. So I phoned a neighbor 2 doors down, and I said, "I don't know what kind of tool I need for this." The point was, he came over, we had a coffee, and he fixed the part that needed to be fixed. So it's really social. Now, when I first joined, I joined the Strata Council.
This is actually a good story, because this is an interesting lesson. Can I interject or let you?
Yeah, go ahead.
One thing, so Mom and Dad are in a townhome, shared walls on either side, but a 2-story unit. And one of the drawbacks with that is you've got windows on the front and back. No natural light coming in. Their house had a huge amount of light. So we in our house have got some of those solar tubes, those new, those tubes that they can put them right through walls. We, in our last house, had them going down into the basement, and they bring a lot of light. And Dad and Mom, when they looked at this, we said, you could have more light, you could put a solar tube in. And the Strata said, "No way, we don't allow solar tubes. We don't agree with that." Dad and Mom bought it anyway, and then you joined the Strata.
Yeah.
And influence the Strata to go that route.
Well,
Now they all have solar
that's
tubes.
probably not a nice story. I sort of talked the Strata into permitting it by signing an agreement that if anything goes wrong with it, it's my responsibility. And if somebody buys our unit, they do too. When I go back to say the house was a dump, so was the outside, it was pink. And the other reason I joined the Strata is I thought, I hate pink. And we worked together and we repainted the entire project, and not one of us dug into our jeans. We had enough money set aside, and we sort of all got agreement and repainted it. To me, it looks brand new. If I said to you it's X years old, you'd never know it. And that's going back into the cost side of it. It worked out quite well. Now 5 years before I bought, they had to redo the roof. And everybody basically had to pay for their own roof. But I like the Strata and I like no amenities because I like the privacy.
And sometimes people do, think they're going to use and enjoy the amenities, so they're paying perhaps extra higher fees to have, all of these wonderful facilities available. But if you're not using them, why pay for them and why buy in there if you really truly aren't going to take advantage of them?
Really good point. And I think, we can open it up for questions in case anyone here has direct questions for them from their experience, or, from us, we will chat at sort of the end. But does anyone have questions for Bruce, our dad, and Sharon?
Cal.
Hi, Bruce. Good to see you.
Hi, Cal.
Hey, I think one of the biggest fears that Carol and I have is that when it comes time to sell our place, we're only going to have 2 months to find a new place. And we're going to end up settling or compromising with something we don't want. So how do you hedge against that? How do you fix that? How do you solve that so you don't get stuck with in a place, in a town that you don't want to be in?
We can sort of answer
Well,
that. Yeah, Dad, you can.
What we did, we sold our house first because I wanted to know what money I had. And fortunately, it was an investor, so we rented it back at higher rent. And I think if I was in your situation, I would sell before you get something else. And if necessary, I'd move into an apartment and do a month-to-month rental. Put all your stuff in storage because it's the buy that's really the next phase of your life. The sale is getting rid of an old one.
Yeah, and it's costly if you pick the wrong thing.
Oh,
and
yeah.
have-
Exactly.
And rush. You don't want to rush.
No.
No,
No,
that's a
moving
good
twice
thought.
is never fun. Nobody wants to have to go through that. It's
No, I put
traumatic
everything in
enough.
storage. I just have them
I
come,
did the same.
take everything,
Yeah.
put it in storage and go rent. Now, rentals in Kelowna up until now have been terrible, but right now, they're gonna be fine. I don't think you're gonna have a problem finding a good place to rent.
Cal, we can ask you about that.
Yeah.
And I think too, there's lots of options that are furnished places too, so you can, as Dad said, put all your stuff in storage, take your luggage and move into something that's fully furnished until you find that perfect property. You can also ask for a long close on the contract side of things. You can put a subject in there subject to you finding something. It makes it a little trickier and sometimes you lose your negotiating power by doing that, but there are options that on the real estate side of things we can do. So.
And if you're planning to renovate, that's probably the best option.
Yeah, so you're not living in.
In renovations.
Yes.
And you're doing it the
Yeah, if
right
you're
way.
gonna renovate, you don't wanna be in the house.
No.
So you're better to plan on renting at the very beginning and get it all done the way you want.
With the option of moving in with your kids or something while they're.
Our other sister has a great
Our
big
other
house,
sister has a
actually.
huge house.
Yeah.
No
Any other questions for them?
Maybe we'll bring Juliana up now,
Sure.
and Dad,
Yeah.
I know you had to go, or do you want to?
I got 5 minutes. I wanna learn about mortgages.
All right.
Okay, well, let's.
Okay.
Okay.
I can sit down if you want.
You guys can sit down.
You were gonna give me a card.
I brought one just for you.
Oh, you're a sweetheart. Thank you.
Oh, now that I'm done laughing at all your side comments.
Yeah.
Do we want to just jump right into chip mortgages?
Yeah, I think so.
Like, I think Peter hit the nail on the head where it's like 100% all about education. If it's
And let's pause for a
Yeah.
minute. Do people know what a chip mortgage is? I know you just said, yeah. So
yes, no, maybe.
it's a,
You can,
No, oh,
yeah, explain what that is.
So CHIP is just a company, but it's all encompassing in a reverse, it's called a reverse mortgage. So there's CHIP, Equitable Bank, Home Equity Line of Credit, like they're all a bunch of companies that all do the same thing, but it is truly just a reverse mortgage. And so what that means is that we can put a mortgage on your property based on your age and the loan to value. So the value of your home, we can go up to 55%. And then a little bit more depending on how old you are and what your plans are. But truly, it has to be an informed decision. And what are we doing with it? It's not a long-term solution unless you don't want to downsize, you don't want to move, this is your forever home and this is where we're staying. Well, then let's access the equity and make it happen.
I always thought the CHIP program was set up so you could get the money ahead of your kids getting it after you're gone. I mean,
You know, you can access it for whatever reason you want. You've worked hard for your money, absolutely. If you want to access it,
And
you.
they're just gonna take it and fight over
So you might as well spend it, right?
it. So why shouldn't I spend it?
Yeah, absolutely. Absolutely. But you can use it for many, many different purposes. You don't have to be purchasing, but you can. Or you can pull some of that equity out and do renovations to stay, whether that means tearing it down to the studs and redoing it, or putting in a stair lift to stay, or whatever is needed for lifts in the house. Like, so there is options that are available for you. It's costly though, so, and I think that's a really good point to bring up, is that it is costly, but what are our options? If we want to stay, we have to qualify for the mortgage, and that brings in the stress test. So right now, to qualify for a line of credit, you're looking at qualifying at 9%, and that gives you access to equity, but same thing, you pay based on the amount that you use, and you're also paying prime plus a half. So prime right now is 7.2, so then you're paying 7.7 on funds, and a reverse mortgage is 8.5. So it just kind of depends on what is the best fit and what is your long-term plans.
How do you pay out the reverse mortgage?
So you can, couple options. You can inherit money from like a life insurance policy. You can pay it all back all at once, or you sell.
Right.
So it's
You don't owe anything on the money you take out until you sell and pay it off.
yeah. So
right?
so interest is compounded monthly, but it's
That's
just added to the principal. So
Right.
you don't actually have to pay a monthly payment.
Mhm.
Versus most traditional mortgages, you do have to make that monthly principal and interest payment.
So I think that's why it's attractive to some, because
Yeah.
it's not changing your monthly costs. You know, it's increasing the costs, but at the end, when you go to,
Totally, and I mean, especially here in the Okanagan, it is a viable option because of the growth in equity that you're gaining year over year. So yes, the interest is compounded and it's added to the principal, but I think reverse mortgages get a really bad stigma compared to the States or in Europe, where they will go up to 100% financing and they will be in the situation where you owe more than what your home is worth. Canada is not like that.
Especially in Italy.
Yes, yeah, Italy is very bad for it.
Can I suggest something? I wouldn't get a reverse mortgage.
Yeah.
But I can, because I got an extra bedroom. And when I bought the house, this may sound funny, I looked at the extra bedroom and thought, you know, when I get to the point that I need help, or my wife needs help, we'll go and get a lady Filipino, and she can live upstairs. She's got
There's
her
no
washroom.
political correctness here.
And we'll stay downstairs. And I didn't take a reverse mortgage, it's too much money.
Yeah.
But I think that you could by putting that provision in.
Well, and then that's opening up options, right? But it's an informed decision of, do you downsize and then go into an assisted living situation where the payments on those are $3,000-4,000 a month,
Oh, horrendous.
right? That they're quite high. Or do you stay in your home and make your home suitable
Work for
for
you.
what you, for what
Yeah.
you need? So then, if that means a full-time live-in caretaker that can do all of those things, cook all your meals, help with daily needs, but then you stay in your home. And then the hope is that our market continues to increase and the accumulating interest at 8% is offset by your 3% or
Increase.
4% growth in equity year over year based on the market value. So yes, they are expensive, but it's at what cost? So do you
What's that
want
worth to you?
yeah, do you want to pay property transfer tax and downsize and go into something else? Or do you want to stay in your home?
Yeah. Do you mind? I've got to leave.
No, Dad, you can.
No
Yeah.
other questions for me?
No, you're good. You can grab a
Perfect.
sandwich on your way.
I don't know how you talked me into coming here. Thank you.
Dad, grab a sandwich if you want. Doesn't hear me?
No,
He's gone.
he's gone.
He's gone.
Yeah, I think the big, yeah, go ahead.
So the commercial says if you own your house.
Yeah.
So does that mean you have to have your mortgage paid out, or can you actually use your reverse mortgage to pay off, say, your last 100,000, so that you're mortgage free in your retirement and that you don't have any payments?
Absolutely, yes. So when they say when you own your home, you just can't rent it, right? So you have to actually own the property, be on the title of the mortgage. And yes, you can pay off your existing mortgage. If there's some credit card debt or you want to take the family on a trip and go on a vacation, you can take 100 out or 150 out, pay off everything, and then there's no monthly payment. You do have the option of making a monthly payment and staying on top of that interest if you wanted to, but you're not obligated to by any means. No. So you don't have to be clear title or no mortgage on there.
So if we've got the reverse mortgage.
Yeah.
And we both die at the same time and our children inherit this.
Yeah.
Priority first is that gets paid out, the home is sold, or the three of them figure out how much to pay the chick back if they wanna keep the house.
Yes, so same thing as with any traditional
So we can leave it till we're
mortgage.
dead and they can think about it.
We can deal with it then. So same thing as with any traditional mortgage. So if you were both to pass suddenly and then it went to the estate and had to be dealt with there, they have the option of purchasing it and replacing that chip mortgage with a new traditional financing if they want to stay
Yeah.
there. Or if they want to sell it and deal with that, you can go from there too. So very flexible in those options.
Who are these chip lenders anyway? Are they,
They're big banks.
big banks?
Yeah, they're big
Not
banks.
the government?
No, they're not the government, no. So Equitable, CHIP, there's a few different and
Investment.
so they are their own standalone banks.
Yeah.
It's nice that we have a few to choose from. It used to just be CHIP and that was one and done, but there's a few different ones. So like there's one specific company that will do First Nation leased land and have a CHIP mortgage, which is nice because most banks won't do a line of credit on a First Nation leased
So
land.
it's not the skater that's, well,
No, so it's all like a reputable big bank, yes, and so it's all disclosed up front, and I think that's the big thing, right, is that we want to present you with options, and so you need to be informed about making your decisions and what is the best fit for you. So everything comes at a cost. What cost are you comfortable with, and what cost do you want to move forward or not move forward with?
I just want to add that I think it's very important when you're considering this is to plan for incapacity for at least one of you. It is like 50% of us will have a period of incapacity before we exit the earth. So when you make these decisions, and they're very important, I think it's really important to consider that in what you're doing as well, because I think it's lovely to have it is the pie in the sky version. It's like, okay, me and my partner, we're going out together, no one left behind, right? That is just so romantic. I love it. But I do want to just like my prudent sense of me is like we do have to plan for that as well. So if you are the one that's left behind, how am I going to, is this house right for me? Can I handle this property if I'm
Right.
and it could be either one, right? It's a dice roll, right? So just think about that too. It's like, okay, if there's only one of us, how's that gonna work? Does the financial plan work? Does the estate plan work? Does the house work for us? Or for whoever is the one that has to continue on? Because, yeah, that is the hard part about living in British Columbia, is that transfer costs to
Yes.
property are so high.
Well, you were saying on average $40,000 to $60,000? Would
Yeah,
you say are transaction costs
yeah, like if you.
for an average home just to move?
If yeah, $50,000 is kind of ballpark, but yeah, if you just don't like a bathroom, renovate the bathroom.
Yeah, it's like that love it or list it, it's that, you know, the whole thing.
Peter, you spoke earlier about taxes. One that people ask about is deferring their property taxes.
Oh, yeah.
So
Great
if you
point,
wanna
Sharon.
speak to that.
Oh, well, the province of BC allows you, if you were a senior, to not pay your property taxes by simply filing an application with them, and then they will defer your property taxes. But it's like a mini reverse mortgage,
Yes.
except it's kind of at a better interest rate. It's on a much lower amount. But if you're in a large house, to not have to pay those couple thousand every year can make a big difference to you. The bad thing is you can't get another mortgage if you have them. So.
Oh, I didn't know that.
Yeah. So
Well, it has to be paid out in full.
It has to be
So we
paid out
can
in
use
full.
the reverse mortgage to catch you up, put the reverse mortgage on, and then you can defer after. But that
Or
reverse
we
mortgage.
defer again if you've already done it.
Yeah.
Yeah, so it is one of those things that, that can be a really good stopgap if I only wanna stay another couple of years in this property. You can easily defer your property taxes for a couple of years, gain that $10,000 or whatever, and.
Are there limitations to that?
In terms of price, yes,
Yeah.
but they just, as long as they're on title, they're okay.
It's only 2%.
Sorry,
It's only 2%, I believe.
2% maximum?
The interest.
Something like that.
Oh, the interest rate, well, the interest rate is really low, yes, absolutely.
I think it's a little
Exactly.
higher now.
And then again, when you
Is it-
sell the
I think
property,
it's
Yeah,
4%.
pay it out.
you have to pay it out.
Have to pay it out.
Yeah, so if you're going into assisted living and you're selling your
Yeah.
house, that has to be,
Right.
of course, paid off.
Juliana, do you have any other points, or does anyone have questions for Juliana?
I have a question, but
Yeah.
it's maybe more related to Shannon and Tamara, because they're in the real estate. I guess my question is, has the Canadian Real Estate Association been approached, or are they lobbying for two things? One is to get rid of this transfer tax, that's the biggest highway robbery there is in this country. And the second one is, in Ottawa, they're sniffing around and talking about possibly taxing your home.
Your gain.
Yeah,
For the
For
gain.
the capital.
So has there been any lobbying done by the Real Estate Association of Canada against this?
Twofold. Property transfer tax is by province. So
Yes.
Alberta does not have a land transfer tax.
Yes.
Manitoba does, Ontario does, British Columbia does, of course. A big one, that's a very big, fuels their coffers well, along with that speculation
Of course.
tax. And there have been discussions about getting rid of that, or even getting rid of
$3
that.
billion a year.
Exactly. They're not gonna get rid
$3
of it.
billion
Yeah.
a year.
I don't think that's
And
going
once
to
they
be.
put it on,
They're not getting rid of it.
Yeah.
Nope. In,
General revenue.
yeah, in the United States, you pay tax on your gain, but you can also write off the interest on your mortgage.
Yeah.
So there's, it sort of works out. Here in Canada, you don't pay tax on your gain. It's tax free with, they're making more restrictions on that if you're flipping or what have you. But then so that's tax free, but then you can't write off the interest on your mortgage, so.
But I
there-
don't know about lobbying that CRA, Canadian Real Estate Association,
Yes.
is doing on either fronts. Certainly not for the sales tax, no, but on that gain, I'm sure they're doing something. I haven't heard much about that. On
The
that
government
front,
is clearly taking steps to limit the applicability of the principal residence exemption, so you do have to declare every year what is your principal residence if you have multiple places where you own property. And they are limiting if you are a tradesperson, because the common was with the home builder, who would live in the home for 12 to 18 months and then build a new one
Right.
and continuous. So they have there's an audit department that's set up just for that now, and they are looking at those at those tradespeople and actually reclassifying that income as a venture in the nature of trade. So yeah, they are tightening the principal residence exemption for sure, and they basically just want people to have one between you and your spouse.
But they also, it seems to me that there's an act passed in Ottawa some years ago that now says, or then said that you must report to CRA if you sell your home. Like, you're supposed to report it to them for some reason. And we know what the reason is. Grab, you know.
Yeah.
Well, and I think, you know, have many people heard about FinTrack? That's Proceeds of Crime, Money Laundering, Terrorist Financing Act. They say, I think it's 65% of money laundering is done through real estate. It's a way to clean money, and we are regulated extremely severely, strictly, to ensure that we are identifying people and to try and avoid that money laundering.
Right.
So they're taking steps.
Yeah.
Juliet, I think you had a question.
Just a different train of thought, but do you have any cautions around pre-sales for downsizing, or any
That's
thoughts on that?
That's a great question.
Can I jump in?
Yeah.
So I think pre-sales are difficult, right? Up until this point in time, we've always seen you buy a pre-sale, it's been at a contract price, and by the time a couple of years later you're ready to move in, it's worth so much more. And everybody thinks, or there's a common misconception, that it's always going to grow in value. This year I had my first rental purchase of a condo property downtown that bought for a purchase price, and our appraisal in January came in almost $100,000 less than the asking price. So the developer doesn't budge on the contract. You signed a contract, this is what you have to come up with. In our case, we had lots of wiggle room in a secondary residence, so we could pull some money out to complete that purchase. But I just want to say that they have risks, right? And so if you're buying it with the minimum down, hoping that 2 years from now the market value is going to support that value, that's a risk, right?
Another one, we've got some people, Cal's trying to help right now renting it out, and we've got somebody who bought sight unseen from plans, a great condo, 2-bedroom in an up and coming building downtown, bought it 2 years ago. I wasn't really involved, they worked with the developer, I'd introduced them, and everything on paper looks really good. And then they went and did the walkthrough. They weren't here, they're down in the Arizona for the winter. Shannon did the walkthrough with the developer, and minor detail that wasn't pointed out to anybody was the bedrooms have no windows. No windows. And the building code now, it always used to be called a bedroom, you had to have a closet and a window. And building code now says if you have an irrigation system, you don't need a window, because that was for egress to leave. So trying to sell this, because they're thinking, well, can you get us out of this? I'm like, well, bedrooms don't have windows. Cal trying to rent it, the bedrooms don't have windows, and it's just one thing. It didn't even occur to me to say, are there windows? When you look at the drawing, it looks.
It's a night shift worker's dream.
It's true. And I went through the website, what we bought from the developer. And the developer, in their show suite and in the photos, they've got a picture of a bed and 2 nightstands and a beautiful scene of the outdoors of an Okanagan. Well, that's a painting. That's art on the walls.
Wow. Another, just in the pre-sales, you were talking about windows, but another thing that comes up is pillars. Very large pillars in a bedroom or a living space that suddenly really encroaches into your square footage. And those are the things that you don't see in the drawings. Or let's say it's the lobby, and you're expecting, because you're buying from plans and pictures, and you create your own vision of what that means to you. But 3-4 years down the road, you move in and go, oh, it's not what I was thinking.
Or what's across the street after it's built.
Yeah.
Yeah, I think it's just knowing all the information. I wouldn't say that I steer away from it completely.
No,
if it's
totally.
the right property and fit and location, because I think that's the key. If you're right sizing, looking at where's the best location to be, and that might be a new under construction condo that's being built, that might be the best location for you. And that value that you're paying for it might be the right value for you. You're not gonna turn around and sell it. So even if the value's worth less at the end, that's okay. If you're comfortable with the value of what you sign on that contract at, and it's the right location, just making sure that you're diligent on looking through those plans, making sure there's windows, looking at, okay, what does this square footage feel like? And some of the things that might help is go through another property that's similar square feet. Could I live in this square feet?
a great
Yeah.
point.
Just having
the contractor.
check out the contractor, go through other projects they've done, just get a feel for the fit and finish. But I wouldn't say that it's a bad option. It depends on if that's the right location for you, I think.
Well, and I think that's the other thing is like our clients still close, they still completed. They're not gonna sell. They love the location, they love the unit. Right now, is our appraisal showing a lower value? Yes. A year from now, they're not gonna take a wash on it. So it's just that timing of when it closed, when they signed.
Yeah.
So
Kelly, you
just
had
a banking question, so say I'm retired, my
Yeah.
house is paid off, and I find the exact place I wanna move into, whether it's a pre-sale or it's the right condo.
Yeah.
Will a bank loan money to a retired person who has the house completely paid off? Or is reverse mortgage the only way I have to in order to buy that apartment in advance and renovate it?
Yeah, so banks so traditional financing looks at money coming in versus money coming out. So just because you're retired, you still collect OAS, CPP, if there's a private pension, some sort of income. If there's nothing, absolutely nothing, then we can look and see what do you have? Yes, your house is completely paid off. Is there other liquid assets? So stocks, mutual funds, investments. We have a lender who even looks at life insurance policies as a liquid asset. So we can use that and match it dollar for dollar on the mortgage amount that we're looking for. So it's all about like, what are your needs? What do you have? And then how can we creatively find that fit? Do you have, liquid cash to put the deposit down on that new build? So you need 50 grand now, but your mortgage doesn't complete until 3 years from now. Okay, do we put a small $50,000 reverse mortgage or a traditional mortgage to pay for that, knowing that you're gonna sell 2 or 3 years from now to move? So it just kind of depends on what the overall picture is, but traditional financing is money coming in versus money going out.
So liquid cash is something I heard you say a few
Yeah.
times. So I was always under the impression if you owned your home, regardless of your age or money coming in, if you owned your home, clear title, that you'd be fine to borrow against that, but
No.
No.
So they don't actually look, even if you had, so no income, $2 million house, clear title, no mortgage, no nothing, but no other source of income, it doesn't mean anything, which is ridiculous because you've worked so hard to have this $2 million house. But if you had a small $100,000 mortgage on the property and you had $100,000 invested that was making you 7-10%, we could use that income that's making 7-10% and use that for qualifying.
Wow, it's a long-term plan. Like
It's
Yeah,
it's
it
kind
is.
of about where does the puzzle piece fit?
Any other questions for Juliana? Okay,
I was good.
awesome, that was awesome, thank you so much.
Thank you.
So I think to summarize, because we won't keep you all for too long, if you guys all have your book in front of you, there is lots of information in there. So to go through it, I think that the summary of it all is the questions that we get asked is, how do I know when is the right time? And I think some of that was answered today as far as, looking at when you can still move to make that transition, when it's a little bit easier and not waiting too long. There's lots of services that are out there to help you. And what does that process look like? And I think, our advice on the real estate side is start early. So have us come do that evaluation so you know what numbers that you're looking at. You might not decide to list right then, but at least if we've done the walkthrough, we know, we can update that for you every 6 months. That's really easy. But let us come give you that value so you know sort of what you're looking at. We can, even if you're thinking, okay, I want to have an idea of where I want to move to, but at least we've done the evaluation. Now I'm just kind of in the process of getting comfortable with where I'm going to move to. We can come take photos. We can do our staging and have our stager come through. I know our dad didn't have the fondest things, but it helps sell, trust me, it makes a big difference. So, but it takes time getting your house ready, and I think that's something that our parents experienced. It took a lot longer than they thought. So having the stager come to give you those tips and ideas, then you have time to kind of work through and work on those things. Then we can have our photographer come. You might not be ready to list yet, but at least we've got fantastic photos so that when you are ready, it's easy. You know, we can jump on and go back onto go onto the market.
And further to what Shannon said with regards to value and finding out what your home is worth, you know, I went this morning and met some people that Sharon is helping. And they said, well, we sort of thought our house would be priced here because that's where our assessed value is. We know it's not exact, but it's probably quite close. And I took them 4 of the sales that Sharon had gone through. I printed those out and took them to them. And I said, there's a $200,000 swing in the assessed value of these homes, all of which sold within $60,000 of each other. Like they're all over the map. Mm-hmm. So assessed value is interesting. It's what they're basing your taxes on, but it's not necessarily a good indication of what real market value is. Mm-hmm. So, you know, a year or 2 or 3 out, we're happy to come in and, as Shannon said, let you know what it's worth. Print that report and stick it in your drawer, and then you've sort of got a baseline to kind of watch the market overall and see where it's at.
Mm-hmm. Yeah.
Would somebody come and help me clear out my garage?
So assessed value is interesting.
We do have people that would help with that.
I know. That's what our dad found too. Is you know, when mom and dad were doing this, mom kind of, the house sort of fell to her, and my dad's like, oh, it'll be fine. I'll just, you know, go through the garage. It'll be easy. And dad wasn't kidding. He did get a trailer and he just threw everything. We were like, those are mementos. That's our baby book. That's our grandfather's RCMP survey.
We were taking it out of the shredding box. We were like, no, we're taking this. But
That sounds familiar.
yeah. So it's Sharon, you found some people who will help you go through everything in your home, right?
Yeah, there's a few services out there, and then on the donation side, there's so many charities here that are so grateful to receive.
Yeah.
So MCC, Habitat, there's others that, and they'll pick up. You know, they make it easy for you.
And there are people that will help you, like sit
Purge.
right with you, purge. They'll go through your boxes with you, or they'll get rid of them, or any of that stuff. So there are people that will do all of that.
I think they do a pile that's donate, a pile that's throw out, and a pile that's go with you to the next home.
Yeah, or sell. Like you can, there are consignment places as well that can sell.
Now, I have a solution for you. If you can't use any of those, take your son or daughter up to the garage door and open it up and say, son, someday this will all be yours.
No, take it to the dad.
So Kim, you had some valuable points in here in the booklet that Shannon has put together. There are some resources, maybe for a bigger downsizing or right sizing, but.
I'm a nurse, I work in interior health, and one of the things that I don't see in this is if you have medical issues and you're starting to look at senior housing, I have a phone number, if everybody has their pen, I'll give it to you, to reach out to interior health and see what kind of supports they can provide in which types of housing. Because I can look at 2 of these, and I look at the prices and they're pretty similar. One of them allows you 3 hours a week of home care, and IH cannot come in and fund that, beyond that. And there's another that offers 15 hours a week, and IH can come in and do $5 a shift for other stuff. So the number is 1-800-707-8550. And that's in community intake, and what you're looking to talk to is a case manager. If the reason you're making these choices is because of somebody's health condition, like you don't want to go and say, oh, I really love the heritage, and find out that you can't get supported in there with what you need. So
That's a very good point.
The nurses that work through this facility are really, really good, know way more than I do. But I've had a couple of people who ended up moving and are now sitting in a hospital bed waiting for a long-term care bed because the assisted living they moved into can't support them.
What was the number again? 1-800?
1-800-707-8550.
It's amazing. It's a really good
Very
point.
helpful.
Mm-hmm. Any other questions from anyone? we given you guys enough information? Too much information?
No.
We're always happy to answer any questions. If you've got questions about just the market in general or anything like that, you probably all receive our monthly newsletter. But yeah, if you have other questions, we're always here to reach out anytime.
And we appreciate you all taking time out of your days. We're all busy, whether you're our dad who's busy learning Mahjong or you're working or something in between. And we're grateful that you came and helped us with our first lunch and learn about right sizing. So thank you.
And thank you to Peter and Juliana too.
Take a bag of chips and a cookie, please, as you leave.
Yes. That's awesome. If you don't mind.